Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. There's been a bit of a covering bounce all of a sudden that you've seen. Just pull out the charts of the Nifty, holding the 10,000 mark and has recovered a bit. Similar is the case with the Bank Nifty as well. And even on the mid-caps, as we've been saying, there's been gradual recovery through the day today. Ashwani and Mitesh with us for the BTST call. So, Ashwani, fair to say that the lows were held today. That was your call as well through the day. But what would be your take for the day? So, and of course, what would be the BTST calls?
See, while futures are at a bit of a discount, I take it as a positive, because at 11,000 if they were at a discount, then there's something to worry. But after the market has been beaten and bashed up, if people are selling now, they are asking for trouble, and that is the reason market is going up. Because at the first tick, you have not broken substantially below it. Even now, you are almost at the open. So 99.50 is a strong support, and I would think that while right now it looks like US will go down, there's a good chance US, if it goes up, tomorrow could be a higher opening which opens around that 10,050-70 zone, and then you play it from there, because we are totally dead and buried. We don't have any more space to go down. So we need a pullback before going down further, and that is what is happening right now despite global cues. As far as stock calls right now are concerned, you have HCL Tech, which is a buy with a stop of 948, target of 980. You have MGL, you can use a stop, say around 945, target of 982. And ICICI Pru, that is a buy with a stop of 374, target of 392. I would think buying into Bank Nifty is a good idea, even for half an hour, because that is where shorts have not been covered, and maybe in the next half an hour you could make some money, because the market clearly is not breaking 10,000 sustainably.
Okay, so Ashwani, you are going into the last half an hour with longs on the Bank Nifty. But that is just for a short covering bounce, may not mean much Monday morning. Or do you think it can pull back a bit on Monday as well?
See, there's no fun in carrying long positions in this sort of an environment.
Yeah.
While I'm hoping US will go up, it may not go up. But the point here is that there has been relentless selling on banks since morning, and the last half an hour, because shorts are not getting traction, the weak shorts would like to book out. So that way, you could make 50-70 points as we go into the close.
I totally take your point, Ashwani. These days, every time my phone beeps, more often than not, it's the US president tweeting, and I wonder, oh God, now what's coming next? Those are the kind of times that we live in. Mitesh, your ideas, last half hour.
Actually, I had a BTST on Dish TV. I think the stock has hit the target of around 70 and it's done extremely well today. So that is avoidable right now. But Andhra Bank remains a sell. Keep the stop at 41, look for 37 kind of a target.
Yeah, a lot of stocks now making highs of the day actually, or ending at the highs of the day. We spoke about some of them. Let's just pull out some more names where we are seeing highs of the day. Tata Chemicals, Berger Paints, Dish TV, Bata perhaps is also nearly there. And just pull out the intraday chart of Bosch. Let's just see that stock intraday, and that one is at the high point. So there's been some buying which is obviously visible in some of these names. Bosch, of course, has corrected a lot from 27,000 to 17,000. There's been some buying as well on that one. Deepan Mehta is also with us now. Deepan, hi, good afternoon. Do you think time has come to start buying now?
Yeah, I think so, and I think that we've been positive on the markets even at higher levels, and have always maintained that corrections like this should not be missed. Depending upon the risk appetite, depending upon the cash on the portfolio, I think these are great levels for investors to buy into good quality blue chip companies and have a kind of a 2-3 year outlook. And we have seen in the past decade or so that whenever there is a sell-off because of global factors, and if investors in India have bought into those sell-offs led by global factors, just a few months, if not a year or so down the line, they have had excellent returns. So I think this time around also, this particular premise will be proven to be true.
pull up Petronet LNG. I mean, along with the stocks that Anuj is speaking of, some very sharp moves on that stock as well underway, almost in positive territory now. Deepan, your thoughts on some of these stocks? Gas stocks have largely been in news. I mean, whether it's the LNG volumes in case of Petronet, or of course domestic gas prices going higher. If you were to play gas, what would be your preferred pick?
With usual disclosure that we and our clients are investors, I think the best play for us as far as gas is concerned is Aegis Logistics, which has a gas division as well as it's a liquid storage division as well. And they are gradually expanding their capacities in both these areas of business. And if you see the past track record, I think it's been exceptionally good. And clearly they are benefiting from the tie-up they have the Japanese company Itochu for sourcing of gas, which is ensuring long-term supply of gas. At the same time, they have the infrastructure in place to import the gas and distribute it forward as well. So that's the top pick as far as gas distribution is concerned. But I do agree with you. I think this entire gasification of the economy has thrown open many interesting stocks for investment. Could be even a Mahanagar Gas Limited, or even a Gas Authority of India also should benefit from increased consumption and usage of gas and increased transportation of gas. And government also is promoting use of gas for various purposes, especially transportation. So I think it's a good, solid secular investment theme to at least allocate some of your investment portfolio into it.
Okay, by the way, just see the intraday move in some of these banking names. Kotak, IndusInd, even HDFC Bank. Kotak and IndusInd are already at the high point of the day. These are, of course, the stronger stocks. Normally, Kotak is buying every time it falls. Same is the case with IndusInd. Kotak, of course, is a stronger stock compared to IndusInd ever since that Bharat Financial acquisition. But Kotak has seen, that's the, of course, candlestick chart, that's seen some buying. Same is the case with IndusInd. And let's just pull out the intraday chart of HDFC Bank as well. And that's the one where we have seen some fresh buying emerging. Still at the in the red, but now trying to recover a bit. Thoughts on any of these stocks, Ashwani, on large cap private banks?
See, the way banking has been dealt with today, it's like it's some sugar sector which you come and you bash up everything. I mean, we need banks. Yes, some banks are bad, but the way things have fallen 3-4%, I think it's fairly clear. The retail-facing private banks will do well. So I think IndusInd, Kotak, HDFC Bank, these are things you should accumulate on days like today. And I think at some point some differentiation will come back. So possibly if there is any recovery, it's likely to be led by these retail-facing banks.
Okay, so the story from the street is we are off the lows. It's not been as bad as perhaps what some feared. Let's get you more opinion on that note. Here's a slice of the conversation that we had with Sanjeev Prasad, Managing Director and Co-Head, Kotak Institutional Equities, and what he thinks of the market and, of course, all the negative global cues that we've been getting.
So you have to look at market always on the basis of stocks. There's nothing like a market. There are several underlying components. So the challenge here, which has been always the case for the last at least 12-24 months, is that the good quality names, they continue to be expensive. They haven't really fallen. Whether they are the consumer staple or the discretionary names or the private retail banks. So they are still on the higher side if I look at any valuation parameter, long-term averages, etc. Whereas the macro uncertainty has definitely increased over the last 6-7 months and probably getting worse by the day. So somewhere some of these factors should have got factored in the valuations of the high PE, the better quality names, but that hasn't happened really, and they continue to be on the expensive side. What's become cheap are the cheap stocks anyway. Stocks which had a lot of value to start with, things like some of the the so-called the private corporate banks, some of the metal names, etc. But they're getting cheaper by the day, and there is obviously no interest in buying these names till the time you see some bottom of the market or some sort of sentiment coming back. So the question is, what do you do in a market like this? But it's very, very difficult because clearly we haven't seen the worst case situation play out. Obviously things have become quite bad on the macro side. But of course, over the last 2 months, domestic political uncertainty has also increased. And now, all the global trade related issues are coming to the forefront. And obviously, that has also dampened sentiment. So that's the whole challenge over here, that it doesn't look like the worst case situation is factored in. On the other side, if I look at a situation where things start improving in the sense, let's say over the next few months you start seeing GST revenues picking up, oil prices cool off to, let's say, $60 a barrel or lower, then suddenly India's macro starts looking a lot better, and many of these names which have been hammered in the the private corporate bank space or metal names, etc., they could probably bounce back. Over the next 1 month anyway, we are going to see some progress on the resolutions of the NCLT1 cases, and if they go ahead smoothly, you see some of these deals getting closed, then you could actually see some sentiment changing for some of the stocks which are affected by some corporate resolutions going forward. So it's a very tricky situation. It doesn't look the market is factoring in a worst case situation. It doesn't look like it is factoring in a better scenario if some of the macro situation starts reversing. Somewhere it looks like we are in the dead zone for now, and unless until we see some decisive movement on the macro either way, either it becomes worse or becomes better, very really hard to take a call at this point in time.
Okay. Sanjeev, over the last 3 or 6 months, what we have seen is IT has remarkably outperformed the banks. Before that, of course, we had seen the financials weight go up to 42% in the index. Do you think there's some more adjustment to be made in that particular aspect, or do you reckon that it's now perhaps a good time to once again be looking at financials after the kind of decline that we have seen?
See, it depends on the time frame you have. Over the next 1 month or so, I don't know, things could probably become worse. If let's say you have a full-blown trade war between between US and China. Let's say if China starts dumping US treasuries, what happens to world sentiment in that case? So on the other side, as I was saying earlier, if let's say the situation is contained on the global front, and on domestic side we see some improvement in the macro plus resolutions of some of the bad assets, then you could actually see some of the banks which have been hammered over the last 2 months bouncing pretty sharply. So it depends on what time frame you have. Over the next 1 year, if I take a call that things will improve in India in terms of the macro improving, political uncertainty going down, or hopefully no untoward political incident, as also some of the earnings recovery and the economic recovery that we have been talking about that plays out on expected lines, and you could actually see some of these bank stocks bouncing back pretty sharply, and IT may not be performing in that case.
Is the high of this market, assuming the global market bounces, are we still going to see Indian markets limp along? How much gains can you make at all, even from current levels?
See, a lot will depend on how the macro pans out from where we are, and I keep coming back to the same point. Unfortunately, nobody has any great handle on the macro. The first thing to watch out for is what happens to GST revenues over the next 2-3 months. Currently, we're running well short of the 2019 targets of the government. We require somewhere about 1.1 trillion rupees of monthly GST revenues. We are nowhere in that range. But over the next few months, if because of implementation of e-way bill system, matching of invoices system, etc., you start seeing GST revenues picking up, then at least the bond market may breathe a sigh of relief, and you could see some bond deals in India starting to cool off to some extent. So that should be a positive. If inflation does not surprise on the upside as on expected lines, and the RBI does not need to act in terms of raising rates, so that should again be a positive. And lastly, if oil prices cool off, let's say to $60 a barrel, then the pressure on the current account, BOP and rupee will also start coming off. So all these things play out, then I guess things could actually start looking up.
So 10,000 briefly back on the screen. I know I'd have to say, that we've gotten so used to seeing that pattern of a slide down day after day after day, that given the kind of cues and the negativity that we had, the fact that this market hasn't collapsed entirely, at least it's been more or less steady, trying some short covering right now. Too early to say whether we would be close to the bottom?
Look, we're talking about things because we saw in the morning the kind of cues that we had. In isolation, it's still been a bad day. The market is still closing with, deep cut of about 1%, 2% down on the bank nifty, advanced decline of 1:5. So that way, there's nothing much to celebrate about this market for the bulls. But the sense you got was that at least in the near term, maybe the selling was overdone. And for whatever it's worth, today we outperformed the Asian peers. Let's see, there would be some fight around the 10,000 marks. We have not given up that mark convincingly yet, 9992. We're trading below that, but not given up that mark convincingly. But next week is expiry week, 3 days to go, and the momentum is firmly with the bears. So let's leave it here for now. Let's come back on Monday morning and see where things go.
No, I take your point because that last hour shorting trade became so simple. This time around, you're getting into a weekend.
Exactly.
And you don't know who says what on which tariff or which issue or what the next Facebook development is. So maybe therefore bears taking a bit of a breather. All right, on that note, let's get an insight into how dealers have dealt with today's mayhem. We've got Nimesh joining in with the latest as always. Nimesh, what have you been hearing?
Hi, Sarvesh. A tough day for the bulls for sure. Clearly there is this global risk off which is playing out across all riskier assets and for that matter India as well. But in terms of flows, it's still been mixed. So it's not like there is panic selling coming in from the larger institutions. But yes, there is some bit of panic now, within the HNI category for the last few days, and that's playing out in the mid cap and small cap and trade as well. So that's something to watch out for sure. Within the larger sectors, it's essentially the metals and banks which have taken a maximum hit. And now people are like looking to hide or take some protection into defenses like IT. So that's playing out in today's trade. The sense I'm getting is maybe next week, closer to the expiry and closer to the year end, you might see some bit of buying coming in and some bit of support around that 9,700 level mark. Even in today's trade, the feedback that I got from some fund managers was there is now some opportunity emerging in terms of nibbling into some of the large cap names and some mid cap quality names. But still, it looks like there is still some more downside left given the expiry pressure next week. But largely, I'm getting a sense that closer to that 9,700 mark, you might see some bit of bargain buying emerging in somewhat of large caps and some value stocks in the mid cap and small cap.
Okay, Nimesh, thanks a lot for that. Friday cheer for United Spirits ending at the high point of the day. So see the intraday chart on that one, and that's making a bit of a move. In fact, the more names as well joining in. Max Financial, that one as well has recovered quite a bit. Of course, the stock of the day from the index really has been HCL Tech. That's the one stock which has consistently through the day made highs. And if you see the intraday chart of HCL Tech, 3% higher on that. Deepan, so, let's talk about IT. I know you have a bearish view, but you reckon something is changing here? Because it just can't be, valuation adjustment or short covering. We have seen decent buying over the last 2 or 3 months.
Yes, definitely. I think we've seen a nice trading bounce in IT companies, and it's got to do, I think, partly with the fact that maybe we'll have a cyclical upswing as far as their quarterly numbers are concerned. The base effect to come in their favor. I think they've had several quarters of flat performance, and these companies have made efforts to grow their volumes, to grow their business, to increase the digital footprint. And that may come through, in the next couple of quarters, maybe as early as the March quarter itself. But the main reason why we are still bearish on IT is that we do not see visibility of these earnings over a longer period of time, say the next 2-3 years or so. And it's very difficult to, really put an assessment or make a forecast as to where the profits of HCL Tech or TCS or Infi will be, say, 3 or 4 years from now. They could just about be at the same levels or slightly lower. And there are some pockets within the IT industry which are doing well. But clearly, I think the base effect and the large proportion of volume in traditional services which presently Indian IT companies have, that is not going to get set off by the faster growing digital services business. So it's a bit of a confusion and I would say and disruption taking place over there. And while valuations maybe a year ago were on your side and you could have taken that bet, that maybe you could see a slight re-rating of the PE multiple. But at this point of time, I think even PEs have adjusted on the higher side. And as I said, there's hardly any earnings visibility. So I'm not convinced of the growth rates of IT companies, which is why we still remain negative on the sector as a whole.
Let's just look at that move on the index once again. 9983 is what we have on the Nifty right now, which still won't be close to the low point or the lowest point. But, and if you see the bank Nifty in particular, that's once again down about 500 points, 510 to be precise. Just pull out that index as well, intraday, and almost closing at the lows once again on that. So really been all over the place today. Ashwani, what's been the big message of the day today? Next week we have expiry as well. The momentum is with bears. You reckon there's more on the downside? Maybe not in the immediate term, but over the next 2 or 3 weeks?
See, the problem is that banks and the large banks are totally unwilling to recover. And in this sort of a weak market, if a leadership group decides to outperform on the downside, it's very difficult for the Nifty to even cross one resistance level. had banks recovered 100, 150 points from the lows today, Nifty would have gotten closer to 10,050. So my sense is that the banks have started a fresh leg down, and all sorts of upside will get capped because HDFC Bank is closing almost at the lows. ICICI Bank is closing at the lows. Nothing, not a single large bank recovered, which means who's selling? Chances are large investors. So maybe you'll get those cute trades in Jubilant Food and Tech Mahindra and all that. But if banks are going to drop another 1500 points on Bank Nifty, it's very difficult for the Nifty to go higher.
Okay, 1.5 minutes to go. We have lost quite a bit of ground once again this week. Anuj, it's not been easy. I was just looking at the data. I mean, PSU banks, that index down 7.5%, Nifty Bank down 3.5% for the week. So still looking tough.
Yeah, it's a tough day. I mean, it's absolutely no doubt about that. You wouldn't have made too much money today by selling after the gap down, but you wouldn't have made too much money by buying either. So that way was a bit of a nothing kind of day. Only those who say sold yesterday would have made money in today's trade. But what's really interesting is that 10,000. I don't know if that actually is going to be an important support for the market at all, because normally the first test at 10,000 should have been bought into, and that too at least a 50-60 point bounce. That hasn't happened, so that leaves the door open for expiry to be slightly on the negative side. We'll find out, of course. In terms of stocks, the big pressure came from big banks, ICICI, Axis, Kotak, HDFC Bank as well towards the end. State Bank of India was down about 3%. Then, of course, metals were weak, so Vedanta, Hindalco, Tata Steel were down. Apart from that, what else? Well, Reliance made a move on the downside, 2% lower on Reliance. Larsen and Tubro, that one was also quite weak, and Maruti was a bit soft. On the way up, of course, IT, and in particular HCL Tech, that stock was up about 3%, and perhaps the Tech Mahindra as well, up about 0.5%. But otherwise, not a good day for the bulls today.
Okay, absolutely. Even on the mid-cap side as well, we've got about a 290-point drop coming in. Advanced decline ratio as negative as you can imagine. We've got almost a 1:5 kind of a ratio. So if we start off with the losers, what was down? Well, a fair amount of banks. There we go. That's the bell for the day and for the week. So a lot of the bank stocks weak. Union Bank, of course, leading from the front, 8.5% down on that to name. IDBI Bank 6, OBC 5.5. Andhra Bank, Bank of India, you name it, 5, 6, 7, 8%. These are the kind of cuts that we're talking about on this entire universe. Beyond this, JP Associates had a rough ride today, 6.5% on the lower side on that one stock. Metals were, of course, an ugly area to be in, whether you're looking at the Nifty names or beyond Nifty. SAIL, for instance, 7.5% down on that stock as well. On the PSU side, MMTC has lost about 5.5% or so. Interesting dichotomy. DHFL has lost about 5%, whereas some of the other NBFCs like Manappuram found a little bit of buying. That should be actually a negative tick. Yeah, so Manappuram is actually up to 2.5%, but DHFL has ended down about 5% or so. Adani Enterprises, 5.5% on the lower side. Then you've got stocks like, a lot of the names on the sugar side as well, which have been extremely volatile. Let's just pull up the final close on a Balrampur Chini. Something like Bajaj Hindustan is down 2.5%. Balrampur Chini dropping about 2% as well. If you're looking at, of course, more names on the losing side, Dalmia Bharat, these are, of course, group of stocks that will be in focus because of news flow. So Dalmia has actually ended down about 4.5% today. JP Associates is down 6.5%. So these are some of the stocks in news. Speaking of stocks in news, Fortis, about 6-7% down on Fortis last count as well. Not too many gainers to speak of, but I should talk about some of the IT stocks that continue to see buying. For instance, on Persistent, in the last 2 minutes of trade, there's been a big spike up, 2.5% up on that stock. Some buying on ICICI Lombard and something like a L&T Tech as well. But Dish TV, of course, saw a smart move, about 4% up, but otherwise, pretty bleak day for the mid-caps as well, Anuj.
Well, yes, so 470 down on the Bank Nifty and about 116 on the Nifty. It's adjusted rate, so 9998, what you see on the screen is the adjusted rate of the last 30 minutes of trade. The last traded price is somewhere close to 9980. Deepan, so you reckon this market could go to and break the last, the last low that I remember is 9700. Do you think it's headed there?
So I think it's a moving target, and if the news flow remains negative and we see such sell-offs in global markets, then anything is possible. I mean, having spent so many decades in the market, all I can say is that the top or bottom is formed only after it has actually been formed. Right now we are seeing a lower top, lower bottom pattern, and unless that gets broken and we see a higher top, higher bottom pattern, one cannot conclude that the worst is over and that markets will start reviving and the bull market of the last 4-5 years would have started again. So it's best to just kind of pace your buying and see for good values, good bargains. These are the times when you get into solid blue chip companies, maybe concept stocks, companies which have had a great track record and have good visibility of earnings, good corporate governance standards. The kind of shares which you missed out in the last 4 or 5 years, this is the time to buy into them and try and improve the quality of the portfolio. Trying to time the market or assessing where the top, where the bottom is I think foolhardy at this point of time.
Okay, all right, Mitesh, any final thoughts in terms of just your approach as we come back on Monday morning?
I think the key is that the recovery wasn't very strong today. There was a halt to the decline. We are quite oversold, but I would want to see the Nifty get past 10,050. I think once an important pivot is crossed, then you have more comfort taking directional bias. So till then that happens, I think we'll maintain, because the market action isn't very strong, we'll maintain some kind of a negative bias, and we carried minor short positions. Of course, you booked part of it because again at lower levels you didn't see the follow through happen after the gap down. So it's a market maybe which after the decline towards the end of the week saw that maybe shorts will take some position off and again come back on Monday, and let's see if it's not very positive news flow, then possibly again start selling the market. So till 10,050, 60 is crossed, that becomes your trading stop loss. I think I would maintain a negative bias.
Okay, all right, gentlemen. Thanks very much for being with us on the show today. You all have a good weekend, and we'll see you again with the markets next week. Quick break on that note. On the other side, now reports have indicated that after PNB and SBI, Union Bank of India has also been hit by a fraud. We caught up with the managing director and CEO of the bank to find out what exactly the details were like. He says the fraud was actually declared in 2016. Now it's just that a fresh case has been filed by the CBI, and they say that their exposure is to the extent of 1,400 crore rupees.
Today, when we filed the case with the interest, it has come to nearly 1,400 crores, because you should understand the NPA of 2012, there will be a lot of interest, unapplied interest on this. And another thing is, this was declared as fraud in 2016 itself. And after that, the process of filing complaint was on. Now this complaint is registered recently. I want to clarify, it's a fully provided account. Okay. Actually, there is 100% provision on this account, and it is not going to have any impact on our book. Whole slippage is going to come from the stressed book. Our total exposure was 12,466. So, and also we have made full provision required, like more than 50% provision in this account as of December itself. So we are not likely to take any further hit on this.
All right, moving on now. As Bharat Dynamics makes a week debut on the exchanges, CNBC TV18's Yash Jain caught up with V. Uday Bhaskar of the company and began by asking him about the company's capex plans and whether the government has any plans to infuse funds in the near term.
PDL has been doing capital expenditure out of our revenues. Okay. And we have a capex plan of around 140 crores and in the current financial year, this financial 18, financial 19, 90 crores. And of course, we have not yet factored this Wish Road program. Once it comes in, that also will be factored with some amount of higher capex. But then all this we can be able to meet from our funds, fundamentally, with the available funds. And also we will definitely, it's a pass-on cost fundamentally, so we will definitely realize out of the product.
Right. Sir, as far as the R&D division of the company is concerned, of course, that becomes a very important part as far as growth here is concerned. What kind of investments are you making in the R&D vertical in terms of from your revenue, and how do we see that growing, let's say, in the next 2 to 3 years?
R&D again is a new direction in the company. Earlier we have been primarily manufacturer on nominated programs. Now as the global market is opening up, I think we would also have to, there would be a need to field our own solutions. Of course it would be complementary R&D to DRDO. Fundamentally DRDO its infrastructure would be put to use. Apart from that, for a product development, possibly first in the form of upgrades, then in the form of our own product range as per the international and national demand. So I think this is the direction which we will travel. Our last 3-4 years, our R&D expenditure started increasing phenomenally, and in fact almost tripled, I can say. But however, if you see the turnover basis, because turnover also was growing in a exponential way, so the overall percentage-wise our R&D expenditure would not be really moving that big way. But however, absolute terms it is increasing, and we definitely have factored a good R&D development in the company.
Where does the order book stand at the moment? What is the value of that order book? And also in terms of margins, what kind of margins do you expect to derive from that order book?
11,000 crores is our current outstanding order. I think we'll be coming 2 years, possibly 2+ years, it will be completed. And of course, we have definitely further orders in pipeline. And I think financials 19 will be really, it is expected to add a good order book for BDL. Further addition of orders are expected. And we are to put together, definitely we would like to really enhance our turnovers in the coming years.
What would be the value of further orders which you expect? Any ballpark figure? What do you expect out of that?
Yeah, I think while but definitely, as you have seen, on an average around 2,000 crores minimum anyway we are adding. But these big ticket programs like say very short range air defense programs and all that are also on the anvil. Together, I think it will be a good order book.
In the first half of the current financial year, your revenue is about 2,200 crore. Your profit is at about 172 crore. Help me understand with what profit and revenue figure do you expect to end the financial year 18 with?
As you have seen, last 4 years, financials 13, we were at 1,100 crores. Financials 17, we were at 4,860 crores. This year, actually, we targeted for 5,300 crores. But I think we had some small issues in 1 or 2 production lines, which are overcome now. We are catching up the numbers, and I think we are very confident of reasonably, around the last year's, revenues and things like that. Yes. So
are you confident of achieving that 5,300 crore mark as far as revenue is concerned, or would you be missing that mark?
We will be missing that mark. We will be around last year's possibly, or maybe not even around last year's, maybe a short of the last year's.
$1
Okay, moving on. Meanwhile, former RBI Governor Raghuram Rajan has said that this is not time for India to contribute to the trade war. Listen in. We'll be back in just a moment.
There are very worrisome scenarios here, so I think we should not take this lightly. I do hope that better sense sort of prevails and we move off from a full-fledged, process of one country doing it and the other country reacting and so on. I don't want to use the word trade war. I don't think we are there yet. But I do think that it's very important that we stay away because it could harm the current recovery, which has been beneficial all over the world.
And some more views. We've been getting you reactions from a lot of top market experts. And here are some more voices. This is what Shane Oliver of AMP Capital Investors had to make of the announcements that came in starting last night.
It does appear to me that it's a negotiating tactic ahead of negotiations with China, all aimed at extracting a better deal from China in terms of the treatment of US intellectual property. It's not in Donald Trump's interest to end up with a trade war, because a trade war would mean higher consumer prices in the US, big impact on US exporters like Jack Daniels and Harley-Davidson motorcycles, all of which would work against his base, his supporters in the upcoming midterm elections. So I think he wants to extract a deal. He doesn't want to cause damage to US exports.
President Trump is right to criticize China for unfair trade practices. However, he's wrong on what he's targeting. I think the fear of a full-blown trade war is way over-exaggerated right now. I actually think both sides are going to be fairly pragmatic.
Okay, let's move on now. It's time to get through all the commodity action as promised. Dharmesh Bhatia of Emirates NBD is joining us on the phone line with a couple of ideas. Dharmesh, thanks for joining in. So, Donald Trump once again rattling markets around the world. I just want to first start with your thoughts on what we're seeing on gold because of a lot of these headlines. Do you have a trade here at all?
Definitely, Trump has created some jittering in the international market globally. If you see, all the equity market has tanked, especially from the Chinese. If you see Chinese FTSE, if you see Nikkei, Hang Seng, everything has corrected very sharply. I'm expecting because of this, there would be some trade deficit. Things will shift around, and you can see dollar getting strengthened. I'm expecting dollar index to head towards 91, 92 level mark, which has actually depreciated 14%. So this will push the gold price higher. I'm expecting the gold internationally to touch the previous high of around 1366, 1367. If you have noticed, last 3 years, 2015, after the interest rate hike, the price of gold has been rallied up only, but it is constantly touching the barrier of 1366. Domestic market, because of rupee getting depreciated to 65 level, you can see some kind of support. But overall, I'm expecting because of the equity correcting, you can see gold getting some support, and you can see some rally in international and domestic market both.
Okay, what about crude? Fairly quiet today. Which way are you betting?
For short term, I'm expecting the crude to show some kind of volatility. Overall, I'm still bullish. I'm expecting this because of the geopolitical tension arises between Saudi Arabia and Iran has pushed the price a little higher. But if you have seen, the price unable to break the $60 mark, it's already holding that level and bouncing back to the same higher level. So unless there is some oversupply, that's the only reason I can push the price down, or else the market will support. And you can see gold and crude is rallying, except dollar. I'm expecting the dollar index to rally for the next quarter. That will pressurize the price, and if crude inventory of US keeps on rising and oil rig rising, then that could be a reason where that sell-off could be seen. Or else you can see the crude price trading higher for this quarter. June, July, again, a hurricane season will pick up the price a little more higher. So 60 is a barrier, a supporting level, and you can see the domestic market to show some kind of high level to 4,400 to 4,500 level in coming weeks.
Okay. All right, Dharmesh. Thanks very much. We'll leave it on that note.